Hey traders, how you guys doing? It is Tuesday. Hopefully you guys are having a great day today. There was some pretty interesting volatility today. It was a very tight range, which we had identified bright and early for our members. As you guys know, we are dead accurate with our analysis. So today the theme was it's going to be Max Pain Day. Okay, now why is that? That is due to options activity, block orders, and also a lot of um, the recent move downward, right? You're going to have a lot of people who are still shorting, a lot of people who are buying calls. We saw very dead options activity over the past couple of days. So what does that tell us? Is that as we approach towards the end of the week, a lot of people are holding this week's options. So that typically leads to a max pain day. They try to get the calls right to the edge, try to get the puts right to the edge, get people to go ahead and exit those. So that was all part of today's planning. And let's go ahead and do a quick review. Right, here goes today's chart. Let's go ahead and take a look at that. This was posted in the morning. Okay, and the range today being, let me pull that up for you guys. There we go. It says, good morning traders. We have a nice gap up. Remember the mooning thumbnails from the previous videos? This is all by design. Now, the simple fact that what we have done in the overnight hours rather than organic buying. So when you see a pump up like this in the overnight hours, typically you're going to get a sideways pain day, or also what you're going to do is a rejection. In this case, we were anticipating and looking for a pain day. So this coupled with the magnitude of the move and blocks we were seeing. The cycle break from a couple days ago, if you guys been watching the videos, you know what that is. Cycle break from a couple days ago. Options expiration week and also dead options volume over the past couple of days. This is simply a shakeout in the markets designed to remove weak hands prior to the next move occurring, and also creating max pain for those short-term options holders. This typically makes for great ranges to work with for us as active traders. Remember, the SPY has a date with 379.42, and it will be reached rather sooner than later. Our job today and over the next coming days is to identify when she will be showing up for her date. As for today, we will be using our ranges to keep us on the right side of the trade. And today, SPY range today is 404.18 to 406.41, with SPY bulls looking to continue last night's action and will get as many put holders out of the market as possible. This will come by way of SPY closing the first two 15-minute candles above 406.41, which did not occur. Once we saw that that did not occur, we knew we were in for a sideways action, some sideways pain for a while, which will keep them on track for the yesterday to and or through 411.38. Okay, now we're not at that portion yet. Remember, we did not get the two 15-minute closes, so very important there. Okay, that the way these are written out is meant to help you guys diagnose and dissect the market activity. So in this case, let's say I had some bullish thesis on the day for whatever reason. I'm trader, A, coming into the market. I read the analysis and I see this two 15-minute closes. Okay, perfect. Now I see that the two 15-minute closes did not occur. I am not going to be going real heavy, or I am not going to be looking for some extended move higher. Okay, that's what these are designed for. Not only to profit from, but also to keep you out of trouble as a trader. Okay, pay attention to all these analyses each and every single day, guys. They mean something. So for the bear play, that did not occur today, but for you guys, it is SPY bears will be looking to not allow price anywhere near 411.38 today. And thus SPY bears will be looking to get below 404.18 on 60-minute closes. Okay, that was their plan today. Also, we're not able to achieve that either. So, SPY closing a 60-minute candle below 404.18 opens the door for a test and or fail of 401.46. So let's go ahead and pull up the chart. See what today's. There we go. All right, let's pull up today's activity right here. Okay, and here is the right vertical right here. Everything to the right of this vertical is today's activity. Notice the first two 15-minute closes. We're not able to get above this red line, which was 406.41. Hence the downturn, which is normal activity, normal action. But pay attention here. Notice no 60-minute close. Close was 404.23. No 60-minute close below for the bears. So that gives us a sideways action. Bulls did not achieve their goal. Bears did not achieve their goal. What happens when you see that? Now you're looking for the next part of the cycle, which in this case is not a 60-minute close until 411.38. That does not mean it's bullish. That's just the next part of the cycle. For all we know, this can just stay in here for the next couple of days, or we'll see what they do in tonight's over-market action, the post-market action, and see if they give us any new cycles to work with. Okay. So overall, pretty good day. We had some great trades. We'll go ahead and do the Apex video next. Go over today's trades. And also we wanted to go ahead and talk about today's activity. So not a bad day. Hopefully you guys, those of you members, were able to analyze that as the process was happening. Right here, when you see this spark in volatility, that's when Powell started speaking. Today he had a speech with the Wall Street Journal on the future events. So that's where all this comes from, and now we're pushing up. So we'll see how we go ahead and close the day and what she gives us for tomorrow. All right, guys. Thank you guys for watching, and we'll see you in tomorrow's video. Later, guys.